Hello everybody. So today I will analyze IREN, formerly known as Iris Energy. And this is a stock that many of you in the comment section keep telling me about. And just like back in the day, I was quick to dismiss HIMS because it sold ED pills. This stock, I was quick to dismiss analyzing it because I know that it doesn't hold Bitcoin. It doesn't hold Bitcoin, and I want a company that holds Bitcoin. So this is why I haven't spent the time analyzing it, because it always was a non-starter for me, because they sell their Bitcoin as soon as they mine it, and it's kind of like a company that doesn't really believe in it. And so because of that, I dismissed it, and I think that's the train of thought that a lot of people on the market have on IREN. Also, because it's scattered across Bitcoin mining and AI services, this is also some of the reason as to why people stay away from this stock, I would argue, and that's why it's very undervalued. You will see. I find it very undervalued, and that's probably because of these two things, and I'm probably not the only one who has set it aside. But I am not doing that anymore for the channel. I'm analyzing it for the channel. So now that I've put that out of the way, I'm gonna have an open mind and look at a Bitcoin miner that doesn't hold Bitcoin. So very, very similar to a gold miner who sells the gold and doesn't own gold. This is kind of like the old way of mining. They don't own any Bitcoin. And let's see if I'm open to that idea. And you'll see I am, because this stock is cheap. So let's get started. First of all, how do you analyze a Bitcoin miner? It's tough to analyze a Bitcoin miner because a miner, unlike a company, a miner is mostly composed of tangible, highly sellable items, right? Tangible assets that are very, very easy to put for sale. And so a miner, what is it? Well, in the case of IREN, it's the rigs. It's not the hodl bag in the case of IREN, but it's the land, it's the industrial building, and it's the energy access. All of this is very easy to sell, and it's very easy to sell in the open market, and that's why I believe it sort of acts like cash, right? It's not like a brand. Most companies, if you analyze a regular company, using EV is smart on a regular company, because cash is cash and you can remove it from the market cap, and so you use your enterprise value. That's smart, but you can't really put a value on a brand and remove that from your analysis. You can do that in a Bitcoin miner, because these mining rigs, for example, you list a mining rig on eBay, you're going to sell it right away. You list a mining rig on any of these resellers, you're going to sell them right away. These are high demand products. Same for energy access. So I think it makes sense to calculate the value of all of the tangible assets, and to later remove the value of all of these tangible assets from the enterprise value, just like we remove net cash. And so then, once you've removed that, those tangible assets, they don't just sit there, they make money. And so what you do is you use an enterprise value minus tangible assets, or a tangible asset value adjusted enterprise value, divided by EBITDA, and then you get the true valuation of the business. I want to be clear that these are highly sellable items. And so this is historically how I've started to analyze, and how I've analyzed on my own mining stocks, and that's what I'm going to do for IREN. So for IREN, we're going to start with a tangible part of the business, and then we're going to see how much they make in EBITDA, do that calculation, and see how cheap it is. So let's get started with what they're worth, right? The sum of their parts. That's why I call it a sum of the parts analysis. So sum of the parts for IREN. First of all, let's get started with the land, the power access, the value of the power access. So I've gone back and forth as to how one should value the mining real estate and the mining property, and I am slowly beginning to think that the right way to value a mining real estate property is not industrial buildings and the cost of industrial buildings. It is not the cost of land. It is the cost of energy access. And I am saying this thanks to CleanSpark, because CleanSpark, if you read their announcement from September 11, when they bought 8 new mining sites, they're only communicating on the cost per megawatt hour. And so CleanSpark seems to think that it's a good deal to pay $324,000 per kilowatt hour. If you read the report of IREN, IREN seems to think that around $600,000 a megawatt hour is a good deal. So the question is, how much does it cost to access a megawatt hour? And I'm going to use that number to value the real estate. And I'm going to take CleanSpark's number, which is much lower than IREN's number. IREN, when you read the report, they say it's worth about $600,000 per kilowatt hour when you have developed land where you can use 1 megawatt hour to power, right? I'm getting the things mixed up, but you know what I mean. 1 megawatt hour access to a industrial facility, to land, getting access to 1 megawatt hour. What's the worth of that? I'm gonna say it's worth $324,000. So, and it's a conservative number because IREN thinks it's worth $600,000. So, IREN has perhaps the biggest amount of power I've ever seen secured by any company. 2.3 gigawatt, 2,300 megawatt. That's how much power they have secured. And you notice that the bulk of it is in Texas. The bulk of it is in West Texas. By the way, on the map, this is not really where Childress is located. That's okay. Yeah, it's all in Texas. And so, what's the value of that power? Well, 2,310 megawatt hour times 324,000. That would mean we have $748 million of power access real estate, accessed powered real estate. That's a tremendous amount of value, especially where when they have curtailment, and this is a debate, by the way, in the Bitcoin mining space, whether companies should curtail or whether they should mine at all times. But in the case of, say, Childress, they highlight that with curtailment, they pay 3.5 cents per kilowatt hour. So that is, if you're okay with curtailment, even cheaper than, say, what a CleanSpark pays. And then 4.3, that's very similar to what CleanSpark and the other miners pay. But they use curtailment, and that's understandable because their goal is not to mine as much Bitcoin as possible. Their goal is to mine the Bitcoin, sell it as soon as possible. They sell compute. They're a seller of compute. Right now, they sell compute to the Bitcoin mining network, but we know this company has no issue selling compute to the AI space. And so that's also why I believe the valuation of this stock is much lower than all of your Bitcoin mining stock, because you don't have a Bitcoin mining pure play, quote unquote. So they still do a lot of miners. So what is the value of these miners? Well, they have funded 30 exahash, which is enormous, right? 30 exahash are funded, and they are going to be installed by the end of December 2024. So let's assume we're at year end 2024, right? That's pretty soon. And let's assume they have a 30 exahash. They funded them anyway, so let's assume they're there. And that would be $810 million worth of rig. Why? Because I am using this number, $27 per terahash, right? And 1 exahash is 1,000,000 terahash. It's $27 per terahash. And so what does that tell you? IREN has 30 million terahashes. 30 million terahashes times 27 equals $810 million worth of rigs. And the number 27 terahashes, I calculated that number from CleanSpark's bulk order pricing, so I consider it to be a conservative number. But I've seen it, and they sell by terahash. I've seen brand new miners, Bitcoin mining manufacturers of Bitcoin mining equipment. I've seen them sell it in the $60 to $70 per terahash hours for the most efficient miners. So there's it depends on the mining efficiency of your miner too. You can have less efficient miners and very cheap electricity like they do at 3.5 cents, or you can have a little more expensive electricity but cheaper miners. And that would be, I'm just using the cheaper number, to value the IREN miner. I'm saying it's 27 cost per terahash. And of course, this will fluctuate over time. I do believe, I view, and I know that miners tend to be correlated in the medium term. They tend to be correlated to the price of Bitcoin. Over the long run, they depreciate a lot and they lose a lot of their value over the long run. But in the medium 1 to 2 year, the cost of the miner is highly linked to the cost of Bitcoin. If Bitcoin goes from 60,000 today to 180,000 tomorrow's, the miners, that would be a 3x for Bitcoin. The miners would not do a 3x, but they would probably do a 2.2 or a 2.3x if the price of Bitcoin were to triple tomorrow, because it's the machine that helps you mine the Bitcoin. So it's gonna be correlated. Correlation is a 0.7, 0.8, 0.6, depending on how new the miner. But it is a correlated asset. So this stock, of course, should see some correlation with the price of Bitcoin just because of the value of that equipment. Keep in mind, $810 million worth of rigs. That's a lot of money in rigs. In my prior video, I've estimated that CleanSpark had almost $1 billion worth of rigs, to give you an idea. So that's a lot of rigs right there. Okay, and then let's talk about the H100. So this is where I think the valuation of IREN is seeing a major discount, because a lot of investors do not know how to classify the stock, and they have 816 H100 GPUs. Right now, these GPUs still have a lot of demand. When Blackwell is out in spring 2025, we'll see what they go for. But I'm estimating that these GPUs are about 20,000 a piece. This is one of the cheaper ones I could find on eBay. Open box, excellent condition, H100. You see it goes for 23,500. That's as of today on eBay, and that's for a used, quote unquote, or open item. So essentially a little bit used. So I'm assuming theirs are used, so I'm saying it's a little cheaper for them, probably $20,000 a piece right now. When the new Blackwell GPU is out, what is this going to be worth? Is it going to lose 50% of its value in a matter of months? Probably, but it's still pretty valuable. And so let's assuming it's worth $16 million. This is the revenue they're earning from the business. So you can see in July of 2024, that was 15 million in revenue from the business. So what does that tell us here? Well, what that tells us is that they are paying for those GPUs in a month, right? So the stock of GPUs is paid for in a month. So if they're able to upcharge quite a bit, the margin of selling H100 compute is very high. The question being is they're so small. It's such a small part compared to the Bitcoin mining that we'll have to see where this goes. For now, this is a small business; it doesn't count too much. So, anyways, let's add it up. What is the EV tangible assets? What is the value of everything? So, the tangible assets that they have is they have $748 million of power access, 810 million of mining rigs, and 16 million of H100s. So that gives us almost 1.6 billion worth of tangible assets, almost. And the company, as of Friday night, is trading at an enterprise value, i.e. market cap minus net cash. It's trading at an enterprise value of 1.02 billion. So 1.02 billion minus 748 minus 810 minus 16, we get a tangible asset adjusted enterprise value of minus $554 million. So Wall Street, in my view, if you remove the value of the tangible assets, the sellable asset that are sellable today, if you remove that, well, Wall Street is paying you $550 million, paying the shareholders $550 million to hold the stock. This stock, in my view, is trading way undervalued. And when you look at this chart right there, you can understand why. I mean, since July 5, it's down 50%. So what does that tell you, right? Had I covered that stock in early July, late June, I would have found you an enterprise value of probably about 500 million. That's what I would have found, a tangible asset adjusted enterprise value of 500 million. Now it's become negative. So the sentiment on the stock must be pretty low, and I think it has to do with the fact that the market doesn't understand the whole scattered approach, or the whole spread out approach. Certainly that was my reason for not looking at the stock. And let's look at part 2, which for IREN there is not much to say for IREN. My part 2 is to tell you that I can't calculate the ratio, the price ratio, the price to earnings ratio, if you will, I believe the more accurate version of price to earnings, which would be my tangible asset adjusted enterprise value over adjusted EBITDA metric, which is my form of price to earnings. I can't calculate that because the tangible assets are negative, because the value of the enterprise value is negative because of so many tangible assets compared to the market cap of the stock. So it trades at a 0 times EBITDA, and in fact, if you're forcing the calculation, it's a -10 EBITDA. It's a -10 EBITDA. So Wall Street is paying you to own the stock. And if you were to overlook everything I said about the sum of the parts video, if you were to say, for example, that there are miners, there are $800 million of mining equipment, of miners that I see, if you were to say, oh, it's entirely worthless, keeping in mind that most miner manufacturers are sold out right now. It's a product that is sold out. Go on most miner manufacturers' website. They say, oh, we may be shipping again in Q4 of 2024. We'll see. So they're sold out right now, and so assume that. So if you don't count anything, so just take EV and EV over EBITDA. In that case, it's an 18.6. So it's too cheap too. But the point I'm really trying to make is that taking enterprise value when literally none of that value is, described or is represented by the brand, none of that value is represented by astute management, none of that value is represented by the fact that they, expended so much money to become a public entity. The value of the enterprise value is way lower than the actual value of the tangible assets, and I don't think it's fair to say that those tangible assets are worth 0. Those tangible assets are worth quite a bit. I'll conclude with this: even if the mining equipment was to be worth 0, like in the case of older miners, for example, for older miners, mining equipment can be very cheap. You still have something that doesn't really lose any value, which is the transformers. There's a lot of transformers in this setup. If you know anything about Bitcoin mining, a big part of that is the connections, the transformers. So maybe 10 to 15% of the value of a mining setup. That value not only doesn't go away, but may even go up in value as transformers are out of stock right now. So that's also something to think about. Cheap, very cheap stock. Am I gonna buy it? I'll see. I have too many stocks, so we'll see for now. But definitely very cheap. And to me, this is a stock that if tomorrow they started to say, hey, we're gonna start hodling, so keeping the Bitcoin on balance sheet, if they were to do that, and then if they were to say, hey, you know what, the H100s, we're shutting down the business. We're not going to go after Blackwell, which is predicted to be so much more expensive, by the way. We're not gonna go after liquid cooling. We're gonna like big tech and we're not gonna do that. We're just gonna focus on the miner. I think this is a stock whose valuation could literally shoot up because it would be so much easier for market participants to value this company. So, in conclusion, this is not investment advice. This is not financial advice. This is just entertainment, hoping you were entertained. Appreciate your likes. Please subscribe if you haven't yet. Follow me on X if you can. Thank you for watching and have a wonderful day.